In 2025, market is going to be crazy volatile. Okay, here are the three major factors that are going to keep the market volatile through and through. First things first, the Trump administration is here and trade wars are going to be starting now. So his policies and rhetoric, overall way that he is going to handle tariffs and trade disruptions is going to create a lot of trade disruptions because of the new tariff regime that he might bring in. It is not clear yet, and that because it's not clear yet, it is even adding to the volatility of the market. Then we have the China relations. Remember, US is the biggest economy in the world, so whatever happens in the US affects the entire world, and China is the second biggest economy, and they have both had a little bit of a toxic relationship because all the manufacturing is done from China. US is a big client, however, because of the tech, trade and manufacturing sectors, job sectors, a lot of other things, China is sort of like been made into an enemy as far as the trading is concerned, trading of goods is concerned. So that might go into tensions, and that is going to create turmoil in the markets. And finally, in general, economic uncertainty, because the policies are not clear yet, and what kind of results the policies would bring about in the actual economy, in the US economy, because of Trump. We will not be able to predict. Nobody can predict right now. So that is going to add to the volatility, because policies, until and unless they are implemented and the results are out, the market is going to be uncertain. Moving on, the new name of the game, or rather new flavor of the market, is the HPMV virus scare. Right now the news is down on it, but the virus is still there. So every time there's going to be a virus, especially after the pandemic, everybody's going to go into fear mongering thanks to the pandemic that we've had. Okay, now in my personal opinion, I don't think pandemic is going to come back that easily, that quickly, and I think we are way more better prepared to handle a pandemic, because once it has have happened in our own lifetimes. But because of the risk of lockdowns and slowing of economic growth, market is going to react wildly. Also, it is going to directly affect supply chains if at all the pandemic happens or the virus actually spreads a lot. Then there's going to be impact on production demand, in taking product in and selling it out. Both is going to become a problem, which is going to slow down the production speed as well, also the consumption speed of things. So that supply demand chain gets disrupted, and it is going to create a lot of craziness in the market, because that impacts directly the profit and loss of a company. And finally, the investors might take their money into some other investments rather than stocks. And you know how money can be moved from markets really fast these days. Okay, so the average investor will think of going into safety. Not just average, but even FIIs might get their money into government bonds, gold, such safe or fixed deposits for that matter. And that will make sure that will take money out of the market, and we'll see some negative impact on the stocks as well. Now, how much it will happen, well, that depends completely on the kind of news or kind of scare that is going on, but it will definitely discourage some investors from staying in the markets. And finally, things that we should not forget, that there are actual wars going on in the world. Okay, just because the news and media is not currently covering it, or it's not in the headlines, the wars are going on. Like, there are African conflicts going on. So everything that is related to Africa, although it's a small economy, so the impact is going to be low, but specific sectors, specific companies might see the impact of a lot of African conflicts. There are a lot of countries that are going through the conflict right now. Although in general, for long term, this is good for the defense sector, because the more war fears are there, the more demand for weapons would be there. But that's a side note. Also, Gaza unrest is still there, which impacts oil prices, and if oil gets hit, then inflation gets ticked off. Okay, so the oil and inflation, there's a clear connection. If you want me to explain how that works, please let me know in the comments below. But energy prices overall, energy in the sense crude oil mainly, will go up and down because of the whole Gaza conflict situation, which is going on right now big time. And finally, Ukraine Russia war, that is still not done. There is ongoing conflict that is still working out. So when it was fresh, market reacted in a wild way. As and when things progress to a higher, if they escalate to a even more serious issues, we will definitely see impact in the market. Russia is already creating trouble for Europe for supporting Ukraine. Russia is a big supplier of oil as well. So all of this will again impact the Indian economy and Indian markets directly. So be sure to be careful around the market this time. If you're a short term trader, this is going to be the worst year for you if you're not careful. So please, 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 I highly recommend for short term trading, absolutely follow your stop loss, use smaller positions, and make sure that you're aware that the market is going to give you some wild swings. And on the long term basis, you don't have to worry at all. Okay, don't look at your portfolio. That's the first part. Second, if good stocks that you have missed out on the last year are coming back, and sorry, the good stocks that you missed during pandemic, or the stocks that you always wanted to purchase are at a higher valuation, markets will go into flash crashes which will bring them down to a very good buying level. So all you have to do is keep accumulating during these flash crashes and hold on to it right through this volatile times. As and when the company progresses, profits from its regular business, the stock price will come back. Whether the market comes back to normal volatility, sorry, no low volatility or not, that cannot be said. If market goes into trending mode, that's great. But individual stocks will grow as and when the company's profits keep going. Okay, so for long-term investors, this is a great news. I think just don't get caught up in the news or the wild swings. Use it to your advantage. Use it as flash crash. Keep cash in your accounts. All right, that is it from my side. This is Yatin Ranade signing off. Hope this helps. Let me know in the comments below if you need some clarification on any of the points. I'll see you guys next time. Bye bye.